Howdy, Jacob here. Today we're looking at Travelzoo in the interactive media and services industry. Very small company, 129 million market cap, 113 million enterprise value. I do like to look at the insider ownership for small companies, and we do see 44% held by insiders. It's a very substantial amount. That's a positive sign, meaning that the company's management is likely going to do what's best for the shareholders, as they are shareholders themselves. And so that is a positive in my eyes. Been around since 1998. Kind of revenue that's all over the place. 153 million in 2014, down to 84 million in 2023. I wonder if there were any sell-offs or whether there was just a tough business happening from 2014 to 2020 and then exploded pretty big. We're seeing huge returns on invested capital recently, and margins on the gross margin side are very impressive. Operating margin side, 18%, probably averaging high single digits though. Let's look at, must be a lot of costs from sales and general admin. Okay, R&D is pretty much nothing. So yeah, just a lot of, it's gone down quite a bit, but so has their revenue and everything. So I wonder if they sold off anything. Let's see. I don't. Well, there's a positive acquisition in 2020, but meaning they divested in something, and then 2022 maybe a little bit there too. So interesting from the numbers perspective. It's kind of all over the place. Looks like they purchased a company in 2020, which doesn't make sense because it said they divested something. So the numbers are looking pretty interesting. Interesting is in like I wonder what's going on here. Like cash is going down pretty heavily. Your they don't really have long term debt or short term debt, but cash going down from 66 to 16 million over that period, and they were producing cash flow. It looks like they just, yeah, I don't know what. I guess they're just using more cash to buy back shares than what they made in free cash flow. So they just use their cash on hand to do that. What was their share count decline? Well, they're already back up to 15 million. I wonder if that's due to stock-based compensation. Yep. Stock-based compensation grew like crazy in 2020 and entirely offset all of these share repurchases that brought the share count from 15 million down to 11 million in just a 6-year period. That is a huge decline. But then we're already back up to the 15 million it was 10 years ago. I don't know. This is just an interesting business. I'm going to start setting some assumptions up, but the numbers don't make the business look very attractive to me. So these last 3 years, I don't know what to expect. And when I don't know what to expect, I just do 3 and 13 because my assumption is that, okay, if I don't have a reasonable assumption of what's going to happen without doing more research, if it grows with the market, has a slight conservatism to their P and price free cash flow down the line, and it still looks like a buy or it's close to buy, then I'll do more research. But if I don't understand the numbers, then it's going to take me a little bit to really do more research. And it's the fact that it just looks confusing at this time. So margins are all over the place here. I really, let's do a pretty wide average. 0% share change. I mean, they have been buying back a lot of shares. So maybe, what is their average? 47 million. So outside of 2020, they really don't make that much in free cash flow, but they definitely have enough to pay for a percent of shares. So let's do 2% of shares repurchase. That's about 2.5 million. They can afford that pretty reasonably, and then the rest just to reinvest back into themselves. I think that sounds pretty reasonable, and it doesn't look like a screaming deal. So I'm just going to wait to do more research. And I mean, companies like this can be interesting. I mean, if it does look like a screaming deal just from the numbers, when the numbers don't even make sense, then this could be a great buy. But for me, I mean, even if I were to do more research, I think that these assumptions are pretty fine to me. So the revenue increasing as much as it has the last 3 years kind of reminds me of something like a airport, airline, or hotel leisure, where like it dropped heavily because of COVID, but they're not too far off, I guess. And the fact that they're still lower is kind of surprising too, since a lot of airlines and cruises and those leisure things that went down pretty heavily are already higher revenue than what they were. So yeah, I just questioned that, but for now, I mean, no need to do any research. It's just not looking like a screaming deal, and I'm going to do research when it is shouting from the skyline at me. So hopefully you enjoy the video. Have a great rest of your day. Thank you.